clarification about what it means to be pre-qualified versus pre-approved. So let's start with pre-qualification. It really is you calling me up saying, hey, I make $50,000 a year. Can I afford a $200,000 house? And I'm going to say to you, yeah, you should be good if you have no debts.
And you know what? It's as simple as that. It's a little more complicated, obviously, but it can be as simple as that. Unfortunately, there is a lot of misinformation that we get, we give, we exchange, and then you don't know where you are, whether you can go ahead or not. So we're going to try and take some of the myths of that. And then after that, after the pre-qualification, then we're going to get into actually being pre-approved. Now,
and you know what?
Reno,
this pre-qualified, I know you always do this, and this is your favorite way to deal with people. I hate it. I absolutely hate it because people say, oh, good, he's giving me a mortgage. It's pre-qualified. I'm good to go. I'm going to go put an offer on a house. No conditions of finance. It scares the bejesus out of me.
Okay, I get it. And you know what? I kind of agree with you. But when I'm getting phone calls every day of the week, several days saying, hey, my bank pre-approved me. And right off the bat, I know that the bank did not pre-approve them.
How do you know that?
Well, because then I get into my questions about what happened. And, within the 3-minute conversation, there's no way that they got pre-approved. They had a conversation with somebody who 3 minutes ago was the teller. And now she's in an office and she's going to deal with your biggest purchase of your life, and that's not, they're not bad people, the people in the banks, but they don't have the experience to be able to fly on the cuff and give you the answers that you need to hear. And by the way, no is also an answer. So be prepared on a pre-qualification to deal with somebody who's going to be honest and open enough to tell you, hey, no, you simply don't make enough money to be looking at $500,000 houses. Perhaps that might be the conversation. But that's what a pre-qualification is, and we're gonna detail it here in a second. But basically, it's a conversation about income, about credit, and how much house you can afford, and how much down payment you have. All four of those things leave so much.
It's very vague.
Discrepancy area.
Yeah.
Go ahead.
Credit. You know what? Credit. People look at that and they go, well, my credit's good, but ask somebody, what is your credit score? And they'll say, well, I don't know. So how do you know if you got good credit? Same as income. I make $50,000 a year. Well, how do you know that? Where did you get that number? Well, that's because of my bank. So it's just too vague to give somebody a very strong opinion on how to help them. So pre-qualification for me, I don't love them, but a lot of people are like, oh, I don't want you to pull my credit report. So as soon as somebody says, I don't want to pull my credit report, I can't do any more than do a pre-qualification for you.
Yeah, and even then, if a person is asking, see, we've done such a good job, the industry has done such a good job of saying, don't have millions of people pull your credit bureau because your score drops. And that actually does drop, and then it goes back up. But everybody's heard that message, and everybody gets it. So they're trying to get us to pre-qualify them, but yet they don't want their credit score hit, so we don't have a chance to see the real number, yet they want an accurate number, and it doesn't work. By the way, you guys are getting your scores on free apps. I mean, there's a million free apps, including ours. Okay. And I'm here to tell you that while we've got a lot of good features on our app, the calculators are excellent, all that kind of stuff is excellent. The credit score that you get off of these free apps is not real. It's bogus.
We talked about that last week, though, Reno. We already told them that.
So we don't want to go over and over again. But when you come to me and you say, hey, I've got a 610 credit score, and I say, where did you get it? And you say Credit Karma or something along those lines, I know you don't have a 610. Okay. And you want to do a 5% down payment, you can't do it. So there goes part of that pre-qual. It's not going to work.
Yeah, it's all verbal. There's no verification of anything. A pre-qualification means that there's no actual verification of anything. So we're really using your numbers, your information, what you're telling us, and we're going a ballpark. Yeah, maybe, possibly, this is what you could do, but it does not hold very much weight to anything.
You
You're
know,
not going to get
and
anything in
that,
writing.
you're right, Sandra, and that's the big problem. We've convinced everybody, the industry has convinced everybody that you do need to get pre-approved or pre-qualified. And it used to be a very important step. But pre-qualification today is worth a 5-minute conversation, and that's it. And you take it or leave it, understand or don't understand it, ask more questions. But it's a pre-qualification that basically gives you the answers that that you need to just to at least start your search for a mortgage. So yes, I can afford it. Yes, I need my credit check, and let's take it to the next step. So pre-qualifications, some of them are good, some of them are crap, and some of them shouldn't even be thought of as any value at all. So be aware of what it is that you're having done, pre-qual or pre-approved. So now let's move on for simplicity's sake, from a pre-qual to a pre-approved. Remember, pre-approved should carry some weight. Pre-approved are, well, we're giving you a piece of paper, or the lender should be giving you a piece of paper saying,
Not always. Not
yeah,
always,
not all,
because
right, you're
sometimes we
right,
can't do
because
that
because
because
that's misleading. You're right. Yeah, go
you're
ahead.
misleading people. They're not always going to have a written pre-approved letter, just strictly because some scenarios will not get one. For example, people have had life happen to them and they've had some bruised credit, possibly bankruptcies or proposals, stuff like that. So those type of people will not get a pre-approval by anybody because it is always subject to the insurer saying they're willing to take on that risk. But let's get back into the pre-approved. The difference between a pre-approved mortgage and a pre-qualified mortgage is the fact that we're actually pulling your credit. We're looking at your income. We're looking at more than just what you tell us. So ideally, if somebody's saying they've pre-approved you, they've asked you for all your documentation so that they can take a look at it to see what's all there and whether or not it works. We're more likely to give you an interest rate. But even then, yes, you can get a letter for a pre-approval, but it's not everybody is eligible for it. Somebody who is self-employed that doesn't declare their income is not eligible for a pre-approval because
Yeah, there's
they're different.
certain things that you're going to get a mortgage. There's no question we're going to get you approved eventually for the mortgage on an offer that you've made. But they want to see, the lender will want to see a live deal, and then we actually structure your specific situation around that purchase. And in that case, then we will likely get it approved without a pre-approval. But Sandra's absolutely 1000% correct. There are certain circumstances that you will not get a pre-approval. Okay, business for self is one of those things. Ex-bankrupt is another one. A lower credit score, a 620, a 630, unless there's some really good justification as to why that credit score is so low, again, no pre-approval. And be aware of that. It's not that you're not going to be able to buy a house. It's just you won't get us to say, go ahead, I pre-approve you for $350,000, and you won't get a document that says, here, I've locked in a rate, or here you are pre-approved. So again, the word pre-approval is also starting to get thrown around as, is it worth anything? Well, it is worth it. It is really worth something because at least you can do it.
What it means is you as a buyer is good to buy a house. However, again, we have some scenarios that we believe that you're going to get approved. We actually strongly believe that, but sometimes in the era of COVID-19, insurers and lenders are a lot more stricter on their guidelines. Whereas a year ago, this would have been a slam dunk. This year, they're saying, well, you know what, we want something a little more from the buyer itself. So that's why we're a little bit more, if there's something a little bit different about you, like for example, you have a low credit score or you don't have a lot of credit, because believe it or not having credit cards is worse than having bad credit. Because at least with bad credit, we know your history.
Yeah.
Whereas if you have no history, that causes problems. So often if you have other ways of showing you can pay your debts, we can get you approved, but we need the insurer to be on board with that. because they're going to look at your big picture. They want to make sure that you've had the same job for a long period of time. And that's the other issue with a pre-approval and a pre-qualification is, normally speaking, is if you're on a, say you're a commission-based person, they want 2 years average. If you're somebody who's salaried, you're a little bit more safer because you're guaranteed certain income. So that's the other challenge with getting somebody pre-approved. Not everybody has a day job where they go to work and they get the exact same pay every single day, year round, no matter what. It does affect how you get treated when it comes to a mortgage.
Right, and then once you are pre-approved, so now one of us has told you, yes, you're pre-approved, or one of us has given you a lender's commitment that you are pre-approved. It's not forever. A lot of the conversations that I start with, or that my customers start with me, is, well, I should have no problem buying this house. I was pre-approved last year and it should still be valid. Wrong. Wrong. Absolutely wrong. Totally wrong. Those pre-approvals there's a date on them when they go into effect and when they're expired. And usually that date ranges somewhere between, usually, not always, but between 90 and 120 days. So if you haven't, from the time you actually received the go-ahead that you are pre-approved, if you haven't already made an offer and got an offer accepted within, let's say, that 120 days, 4 months, then that pre-approval is gone.
However, Reno, it's funny you said that. Even within the 90 to 120 days, rules change so fast. For example, I've had clients 6 months ago that got pre-approved, but only qualified for 200,000. Well, today, those same people can qualify for 220, 230, because why? The qualifier rate changed, and that is affecting the amount they qualify for. Also, people have a tendency that, hey, I got a pre-approval, so I can go and buy a car now. No, you can't. Don't do it. Don't do it. All we say, and we tell everybody, I think we say this every single week with every topic we have, don't buy a car until you have the keys to your new house and you're sitting on your couch, okay? Because that car will affect what you can buy for a house. It will cause your pre-approval to be useless. Not only that, no, there's even more to this, is we have people that we say, yeah, you're good to buy a $250,000 house. And they come to us and say, well, I just put an offer on a $300,000 house. Why don't I qualify anymore?
And you can only laugh at that because we are your friends. Okay. So when you come and tell us that, it's not that we didn't want you to buy a $300,000 house to start with. Remember, we work on commission. So the more house you sell, the more expensive it is. We get paid on that amount, not whether or not you qualified or not. So if you go, it's that amount. So I prefer you buy a $300,000 house than a $200,000 house. So I'm not holding back. So when I tell you it's 275, don't ask for 300 because 275 is the right number. So you'll cause a whole bunch of disappointments, mostly to yourself. And then I start to look bad at you, or I look bad to you because, oh, Reno, for $25,000, you blew me out of the water. You couldn't buy it. Well, I didn't do it. It was you. I already gave you that number. And when we give you a number in pre-approval, that is not just us. All lenders give you a number in pre-approval. That's the number because we've done all the paperwork. Everything is done except for the house. You didn't have a house at the time, so we did everything about you. We found your job, definitions and payments and all that kind of stuff. We checked your credit. We saw how long you've been in there. Everything that we needed to check about you was done, and it's behind you. The rest of it is when you find a house, we match the two up. So speaking of matching houses, this happened to you, Sandy. Well, it's happened more than once, but it happened to you. Sandy, it wasn't even Sandy's customer. So we get a phone call Sandy gets a phone call from a realtor. And the realtor says, I'm so mad at, well, BMO. That's who it was. I am so mad at BMO. And Sandy says, why are you mad at BMO? And this is a realtor. This is a seasoned realtor who should know better, who has experienced this before, I'm sure, but I don't know, forgot about it. So he said to Sandy, I'm mad at BMO because my customer has a written document from BMO saying that he is pre-approved. So I went in and did an offer on a mobile home.
Oh my gosh, yes.
That's the one I'm talking about, Sandy. On a mobile home, and then BMO didn't proceed with it.
That's when I was working at BMO.
Yeah, that's when you were working.
Because pre-approvals do not apply to mobile homes.
Right.
That's the thing. And a lot of people don't realize that a mobile home is not technically a house. It is a loan. That it's a special loan that you have to get. And I mean, BMO and a lot of lenders do them, but not very many anymore. They've kind of come away from those because there's too much risk involved with them. So the pre-approval does not mean don't go in with conditions of finance. And that's what happened with this client and this realtor. Was a realtor believed the client when the client says, oh no, I'm good, I got a mortgage. But what he had was a pre-approval for a house, not a mobile home. So we can't blame BMO for this one. It wasn't BMO, it was the customer was not listening, because we clearly tell them that this is what it's for. So as much as Reno likes to beat up those banks, it's not always the bank's fault either.
Well, definitely not the bank's fault. The bank was covered. The bank puts in all lenders, not just the banks, but all lenders in their pre-approval put in all the conditions that if you read them, you'll understand why. And I forget the wording exactly, but it basically says, okay, you're pre-approved, no problem. However, if anything changes, material changes for you, job, new car, all that kind of stuff, we reserve the option to back out, because it's going to make effect on the ratios. But the property has to fit certain standards that the insurer, that we, the lender, and the insurer, because you're coming in with less than 20%, follow to a certain standard. And if mobile homes in that particular case are not part of it, then you don't get pre-approved. Same with condos. I mean, there's some condos for a couple of 100 feet. I mean, I don't know what they are. They're shoeboxes probably, but you can't get qualified. Even though you had a pre-approval, if you make an offer on a 200 square foot condo, chances are very, very good that it won't be approved. So even pre-approval leaves some loopholes.
There's other things about condos that affect pre-approvals. When we're doing your pre-approval, we're normally saying, here's your maximum house price and here's the maximum property tax amount you can have. But with condos, there's condo fees. And we've seen them run anywhere. Actually, you can say, what was your condo fee when you lived in Ajax?
And many, many years ago, the condo fee was $875 a month.
So that affects how much you afford. That is absolutely going to be a deal breaker whenever you're buying a house. So always, what I suggest to my clients is, when you see a property you want to buy, send me the MLS. Tell me what the purchase or the property taxes are. Tell me what the condo fees are, so we can run the numbers to see if you still qualify for that property before you run to go look at a house that you're going to get disappointed because you can't even offer on. And second of all, before you can take up that realtor's time, because their time is money, right? So they'll get mad at you. Eventually, they'll just stop showing you houses when you keep taking them to houses and you can't afford them.
For those of you living buying in the Ottawa marketplace right now, remember, Ottawa is going, and it's a great town, and the real estate market is booming. It's a wonderful place to buy real estate. And they're still somewhat reasonable versus Vancouver and Toronto. So listen exactly what I'm saying here. But right now, what you could buy for about $350,000 2 years ago in Ottawa, minimum should cost you, again, depending on the property, but $500,000, $550,000, $600,000. So the price has jumped up that far. And you know what? That's to be expected. It is what the real estate market does, and it will always do that. However, when the realtors, and they're licensed, we're all licensed, we spent most of the time as a realtor learning all the conditions to protect your customer. Well, now in Ottawa, they do no conditions. So they buy a $600,000 property with no conditions, which is a binding contract. The customer, that could have been ours, might have been their own, now had a pre-approval for $400,000, and you bought a $600,000 condo, no conditions. That's a legal document. Put some conditions in there. Even if you're pre-approved, you need something to protect you, just in case the lender decides that your ratios don't work anymore, or the house doesn't work, whatever, for a million different reasons, you need some conditions in there just to
I've
protect.
actually had four deals in the last month fall apart because the house was a problem. Usually to do with a home inspection, there was structural problems. Whenever you have structural problems on a house, the lenders won't touch it. So that's the big thing. A pre-approval is not a guarantee. It's even after you're approved. So the next step after that's going to be an actual mortgage. It is not guaranteed until you get the keys in your hand. So if you make any changes between the time that Reno or I give you that approved mortgage, again, you could lose your mortgage because you decided to change your job, quit your job. And we see this more often than not, where people quit their jobs 3 days before closing and wonder why they can't get a mortgage anymore. Well,
Hey, we're basically out of time for that section. We got to get to some of these emails and stuff that we get during the week. However, I want to give you just some really quick tips, and so that you'll understand and hopefully you remember the key differences between pre-qualification, pre-approval. Number one, do I need to fill out an application? Well, if they say no, that's a pre-qual. If they say yes, that's a pre-approval. Do I have to pay an application fee? Most of the time, no. But some people are charging application fees, so at least be prepared to have the conversation. Does it require a credit history check? And if the answer is no, you're talking a pre-qualification. If the answer is yes, we've done it, it's probably a pre-approval. Is it based on the review of my current finances? If the answer is no, it's a conversation, not even a pre-qual. However, if the answer is yes, it definitely is a pre-approval. What else we got down here?
Okay, just will the lender give me an estimate for a loan amount?
Yes. Well, it's an estimate. Yeah, you can afford 400,000 in a pre-qual.
Yeah.
In a pre-approval, no, this is the amount maximum that you can spend, not approximate.
Based on certain scenarios. Maximum you can spend based on this amount of property tax, and if you have condo fees, this amount. Will the lender give me a specific, I just asked that question. Will the lender give me an interest rate information? Pre-qualification, no, they're not going to tell you because they can't really answer. They don't know your scenario, and interest rates are affected by you as the client. Pre-approval, yes, if it's a written one. But again, if you fall into that category of people that we can't, whether it's bruised credit, self-employed people that don't show their income, things like that, good chance you won't get an interest rate. But everybody else, they could give you an interest rate. Any other questions, Reno,
let's get on. Folks, you know what? Half an hour is not a very long time. We're trying to keep it interesting, so that's why it's half an hour. Otherwise it gets long and boring. But let's get to some of the, and again, we're not going to get to all of these, but some of the emails, some of the questions that we get. The first one was, I'm planning on buying a property in Ottawa. See, Ottawa, very popular area for approximately $500,000. I'm employed and my household income is $100,000. I have zero debts and I have the 5% down payment. Score is 450. My credit score is 450 because of a previous bankruptcy, which is not discharged yet. So he's still in bankruptcy. Remember that key word, are you discharged? Because if you're not discharged, you're still in the bankruptcy. What can you do for me? Well, it was still in the bankruptcy, right at the quick answer. There's always answers around everything, but the quick answer is no, it's a full stop. If you are in bankruptcy, there's nothing we can do until you are discharged from that bankruptcy. So, and then you remember you told me in the email that you got 5% down payment and you're still in bankruptcy. Well, 5% down payment is not going to do it for you. Even as soon as you get discharged, it won't do it for you. You're going to need a little more down payment. So let's have that conversation. Question number one was that, but there's so many different scenarios and different ways to answer that question, because I still believe that for everybody in Canada, there is a mortgage of some kind. And if we talk through it, I'm sure that we can find something for you.
This is exactly the reason why you want to do the pre-approval. So let us take a look at your stuff. Let us take a look at your credit.
Although you won't get pre-approved. If you're past bankrupt, you won't get pre-approved.
Well, I know that, but what we're going to do is we want to actually pull your credit bureau so we can take a look to see how you can fix your app yourself so that you would qualify. It might be as simple as saying you have to wait one more year till you can apply. It could be that simple, or it could be as simple as you need 35% down in order to get this here straightened away, because maybe there is a private lender that'll do 35% down with a 3-year 4% fee. So it's important to talk to us, and don't wait till the day you want to buy a house to do this. Let's do this before. Let's do this 6 months to a year before you actually want to buy. That is probably the best advice we can give, right, Reno?
Well, a year, absolutely, we should start talking, but at least 3-4 weeks before you actually start making offers, you really should have all this stuff done. And it's so important. It's to you. It's to your benefit, especially with these multiple offers going in. You're competing against 30 other people, so you want to make sure that all your ducks are lined up. And if you're serious about it, well, you shouldn't be serious. You shouldn't be making offers on houses you're not serious about anyway.
Exactly.
But if you are serious, then you need to have the tools in place in order to be able to win those bids. Question number 2. I have a $50,000 annual income, same job, 5 years, good credit, and I have 5% down payment and have an offer on a $300,000 property. Will I qualify? Well, I'm not laughing, okay? I'm not laughing. We get that kind of question all the time. And again, especially in Ottawa, there's a lot of $50,000 jobs in those $500,000 homes that there's a total disconnect. You can't. If you can make $50,000 a year, you won't be able to afford a $500,000 house under any circumstances. So can you afford a $300,000 and a $50,000 income? The quick answer is no, not likely, because you don't make enough income. But you know what? Let's have a talk about it, because we might be able to bring in, well, we can't even do that. We can't even bring in first-time home buyers because there's a maximum how much you will qualify based on salary. So we need to have a conversation. It's not an answer that anybody can answer truthfully and accurately within a couple of minutes.
That word annual income, people forget that they have children. Right?
Yeah.
Children bring income. They're part of that income thing. So there's more than one scenario. Perhaps also what I've had a lot of is where mom and dad live with their kids. And now you can bring mom and dad on the application because you all live together anyways. So between all 3 of you, you have a household income. So annual income is a very vague word. There's more than one type of income. So again, give us a call and we can talk about what exactly is income and whether or not it's going to help you get to where your goal is. If you're looking to buy a $300,000 house, because the $200,000 houses are very rare these days, very rare. So that's kind of where we want to go with that, is just give us a call, have a conversation on what income you have and what you qualify for.
See the common thread here? The common thread in all of our dialogue that we're having about these letters we're getting is let's talk, not let's text. I mean, although we'll do it by text, but let's talk. Let's get some information so we can give you an accurate answer. That's what you want. You don't want a fantasy answer. You want a real answer. So let us give you a real answer. Here's one I get all the time. This could be cloned 150 times a year for me. I have no job, no down payment, and bad credit. Is there any chance of me getting a private mortgage? And the thought process behind this letter is that they hear that private mortgages, yes, they charge more money and they charge fees and stuff, but they will do stuff that regular lenders won't. But remember, he's got no job, so he's got no way of paying back any debt. Number 2, he's got no down payment, so he's got no skin in the game at all, none, 0, and he wants somebody to fund him 100%. And he's got bad credit, so he's got a proven record that he doesn't pay bills. So a private lender is not going to risk his own money just because you're a nice guy. So on the other hand, my answer to that is no, but let's talk and see. Let's get the real details as to what happened.
That's right, Reno, and we're down to the last minute here. So quick thing is, I think the biggest thing we're talking about here is talk to your mortgage person. We have the answers. Don't talk to your friends. They don't have the correct answers. It's better than that. You don't want your dentist working on your teeth now, do you?
But and we get that all the time. We get, well, here, you're fully approved. We got the person fully approved. So all they're waiting for, another 2 weeks because the house, that's when it closes. but everything went smooth. Everything's good. And then we get phone calls towards the middle, probably 7, 8 o'clock at night, because we do answer our phones, and saying, hey, my brother told me instead of 5% down, I'd rather put 20% down. He's going to loan me the money. Can I do it? Well, yeah, I guess you can do it. But have you listened to all the reasoning and the rationale behind doing it or not doing it? And the answer is no. Just because your brother told you is definitely not the only answer. So, like Sandy says, you wouldn't go and get your teeth pulled by the bus driver. It doesn't work. If you're going to get your teeth pulled, talk to a dentist. See what the dentist has to say, and then if you need teeth pulled, they get it pulled. So talk to us about all those little problems and all those little questions that you may have, and we may have the right solution. And you know what? We are definitely out of time for this week. Hey, I'm Reno Viola. I'm the mortgage guy.
And I'm Sandra Brown, mortgage broker.
And mortgage machine. We'll see you next week, folks.
Mortgage, okay.